All right, so today we're going to talk about something that might sound a little backward. We're going to cover exactly how to lose money trading stocks. Yeah, you heard that right. Because you know what? The absolute best way to learn how to win is to first understand all the ways the game is designed for you to lose.
And let's just get one thing straight right from the start. The market is not your friend. Think of it more like a battlefield, and it is filled with professionals, predators really, who are just experts at one thing, separating newcomers from their cash.
Okay, so let's dive right into this minefield. Why do so many new traders fail? I mean, it's not just a string of bad luck. There are very specific, very real traps laid out just for them. So what are we talking about here? Well, these are the main culprits. New traders, they get sucked into things like pump and dump schemes. They chase these super risky penny stocks. Or, and this is a big one, they just let greed and fear call all the shots. But the real root cause, the one thing that makes all these other mistakes possible? Having no plan at all. Zero strategy.
So if having no plan is the problem, then, well, having a system is the solution. And this requires a pretty fundamental shift in how you even think about the market. It's not about hunting for some hot tip. It's about building a machine, a system that finds the opportunities for you. Which, of course, brings us to that million-dollar question every single beginner asks. I mean, with thousands of stocks out there, how in the world are you supposed to pick the right one?
The answer is actually pretty simple and maybe a little surprising. You don't.
And this is the absolute key to the whole thing. A really well-defined strategy takes you out of the equation. It takes out your emotions, your gut feelings, your biases. The system makes the calls, and your only job is to follow the plan. So, how do we build this system? Where do you even start? Well, it all begins by answering 3 really fundamental questions about yourself. And you have to do this long before you even think about looking at a stock chart.
These are basically the guardrails for your strategy. You know, how much money are you actually playing with? What is the absolute maximum amount you can lose before you have to stop? And maybe most importantly, what level of wild swings can you actually stomach without freaking out? Answering these questions honestly is the first, and I mean the most critical step.
And just look at how powerful this is. Let's say you decide, okay, I absolutely cannot lose more than 20% of my capital on a single trade. Boom. Just that one simple rule automatically gets rid of all those crazy hyper-volatile penny stocks. The massive, overwhelming universe of 2,800 stocks on the NYSE, it suddenly shrinks down to a much more manageable pool of maybe 500. Your strategy has already done most of the hard work for you.
Okay, so once you set your personal rules, the next layer of your strategy is to kind of zoom out. You need to stop looking at individual stocks for a second and start looking at the entire market. You've got to figure out where the money is flowing.
This brings us to a really important idea: fixed liquidity. Just imagine that all the money in the market is in one giant bucket. If a whole bunch of that money gets poured into one area, say biotech, it has to come from somewhere else, right? Money always flows along the path of least resistance to where the biggest returns are. And here is a perfect real-world example of this in action. Between 2014 and 2016, oil prices totally collapsed, and money just fled that sector. So, where'd it go? Well, think about it. For airlines, super cheap oil means way lower fuel costs, which means bigger profits. So the money flowed directly from the oil industry into airline stocks, and, well, they took off. A smart trader learns to see that flow and follow it.
But here's the thing. Even with a really great strategy, there's another major danger you have to watch out for: misinformation. The market is just flooded with news, reports, opinions, and a lot of it is not designed to help you. It's propaganda.
And this is so important. You have to pay attention to what the insiders do, not what they say. Their public statements, that's just marketing. Their private actions, like selling off millions of their own stock, now that tells you the real story.
Just look at this Snapchat case study from back in 2018. The CEO was out there publicly defending this hugely unpopular app redesign. But behind the scenes, privately, he dumped over $50 million worth of his own shares. And it wasn't just him. Other insiders were selling shares every single week. Their actions were screaming, "We have no confidence," no matter what the press releases said.
But we have to be realistic here. Even the best system, one that sees right through all that misinformation, can't protect you from everything. A strategy is about reducing risk. It's not about eliminating it. Sometimes stuff just happens that's completely out of your control.
Take this company. Apricus Biosciences. By a lot of metrics, it was considered a fairly low-risk stock, but then, overnight, it lost 2/3 of its value. Just gone. Why? The FDA rejected its new drug. No amount of chart analysis in the world could have predicted that kind of external shock with 100% certainty.
And that's really the bottom line, isn't it? Trading involves risk, period. A strategy is a tool for managing that risk, for stacking the odds in your favor over the long term, but it can never, ever make the risk zero. So, to wrap this all up, building a strategy is how you survive that market minefield we talked about. It's your shield. But you know, a shield is completely useless if you drop it the second you feel that heat of fear or that irresistible pull of greed.
And that really leaves us with the final and honestly the most important question. The strategy does the thinking. It picks the stocks for you. It tells you exactly when to get in and when to get out. But it's completely worthless if you don't execute the plan. So the real question isn't whether the strategy works, it's whether you have the discipline to actually let it.